Okay, it looks like we have most of our group. Today, I am pleased to welcome you to another of Milwaukee Public Library's virtual programs. We hope that you will continue to join us online by visiting the library's website at mpl.org/library/stay connected, where we will host virtual programming for the rest of 2020. During the webinar, we have muted everyone's microphones and disabled sharing your webcams, so you will be viewing this in private. This webinar will be recorded. We welcome you to submit any questions for the presenter in the chat box, and our moderator will present a selection of your questions anonymously at the end. For any other questions about library services, please contact the Ready Reference Department. In the handout section, we have included a financial worksheet for you to complete after the workshop, as well as Director Paula Kiley's statement on race and social equity. We condemn all racial inequities. MPL acknowledges and will work to dismantle systemic racism and is committed to achieving equity, understanding this is an ongoing process. And now I'd like to introduce Tim Reid from Money Management Educators. He's here to help us explore our options for saving and protecting our nest egg over time. Thank you,
Hello.
Tim.
Hi, guys. So welcome today. I wanted to just start with a couple housekeeping things before we jump in here. Anna had mentioned the handout. In the handout, you guys will see there's some places you can take notes if you want to print it off, and also just some information about Money Management Educators, who we are. MME is a nonprofit financial wellness organization. We've been doing workshops, webinars, lunch and learns in corporate America for over 30 years, providing just information, financial education on a really wide variety of topics. So today, what we're gonna do is start with just looking at building your financial house. So looking at our financial world through the lens of a home and how to build a house. So today, what I really want to focus on, where we're going to spend most of the time, is actually on the foundation. What I've been seeing, a lot of people I've been working with during this whole crisis, the economic crisis, the pandemic, a lot of people trying to kind of fix their financial house in the middle of a pandemic, and it just doesn't work that way. So, you know, if you want to have a strong house, you can't build your foundation on sand. So we're really going to focus in on that aspect today. One other thing in the handout is part of this MME. We know that workshops make a big difference, and learning information is great for all you guys, but sometimes that leads to more questions. And we get a lot of people who, you know, we can't drill down on everyone's personal situation during this workshop. So if you have questions, the last page of that handout is a response card. On there, you can ask for a half-hour one-on-one with me or one of our other educators, and that half hour is education only. So it's an extension of the workshop where we're willing to sit down and talk about any of the questions that might come up from the workshop today. So let's move on ahead here to the next slide and get rolling on the workshop. So like I said, you have to build your foundation. You know, you can't build it on sand. So if we go to the next slide, we're going to start and look at the key pieces that we want to have to build that strong house. So this is kind of all the stuff that people don't necessarily get as excited about, but I have had more questions around this area of finance in the last like 3 or 4 months than I have in a while. Right now, more people are inquiring about getting life insurance, about do I have a will, do I need a will, what do I need there? So we're gonna go through some of the basics. And if we go to the next slide, we can just get started with the first piece of the foundation. Well, and and really kind of what we're talking about here when we talk about the foundation is two pieces: income replacement and loss against death or assets, losing assets. So as we move on, all these pieces will kind of address one of those two issues. So next slide. So medical insurance, most of you probably get medical insurance through your employer. Just know what you have, know what the options are as far as, you know, is there anything at my company I can do to reduce my deductible, any kind of programs they have. Know your benefits. I've known some people that have double paid on procedures because they haven't used their insurance the right way. So the biggest thing I'll say about medical insurance is just know what you have. Know if you have a spouse, have you done an analysis as far as, you know, whose insurance is the better coverage for us as a family? Should we be breaking up our insurance to one or another people or whatnot? So go ahead and move to the next slide. The next piece I kind of wanted to touch on here is long-term disability. And most of you, again, are going to get this through your employer. One thing that I really want to point out on disability, a lot of people these days earn commission or bonuses through their work. More and more companies are going to a bonus structure. Typically, that is not going to be covered by your disability insurance. So if you make 50% salary and 50% bonus, only the salary is usually covered. Any disability insurance you have, so if you become disabled, can't go to work, that disability insurance, which is usually about 60% of your income, is taxable. So that would mean you have to pay taxes on the 60% you're getting when you're not at work. If you have questions about this, this is something, you know, disability policies are pretty affordable depending on what your occupation is. So if you're like, maybe I need to look at getting like a little supplement compared to what I have at work, that's something that definitely is worth a conversation with someone if it's popping up as maybe like a red flag to you. Go ahead to the next slide. Life insurance, this is the biggest question that we're getting right now. And I have a lot of people that are just wondering, you know, hey, do I have enough coverage? What type of coverage do I need? How much should I be putting into this? So there's a lot of questions that we get around life insurance. Life insurance is one of the cornerstones really of your foundation. So I hear from a lot of people, oh, I have it at work, I'm good. Well, most work policies are only 1 to 2 times your income. They don't go with you if you change to another job. And as you'll see, like most advisors would typically recommend minimum 10 to 20 times your income for total protection, especially if you have little kids, a home, any type of person who's dependent on your income. So this is something that if you haven't sat down and talked with someone to just go through, like, what are my needs, you know, how am I covered if something were to happen, it's a really good area to put a little bit of time into. Go ahead to the next slide. I'm just going to really touch on the 2 different kinds of insurance now. There's a lot of different kinds of insurance, but for sake of today, I'm just going to talk about term insurance or permanent insurance. Term life insurance provides coverage for a specific number of years for a specific premium. So what that means is if I want coverage for 20 years for $1 million, I can get it and I have a level premium for those 20 years. After that 20 years, my coverage is typically gone. So the advantages are when I'm young and have kids, a house, I need more life insurance coverage, term insurance could be really affordable. So private policies are available with the option to convert them later to a permanent policy. And they offer protection, so you can get a lot of coverage usually for a low amount of monthly or annual money. The disadvantages are, as I get older, the term insurance is going to get way more expensive. So the cost of this really goes up as you get older. After the 20 years, if you want to get some new insurance, the cost is going to be exorbitantly higher. So you're going to have to pay a premium that could be 10 or 15 times what you were paying back 20 years ago. So there's no cash value or equity that builds in these policies. They're just there for really a permanent problem, which is that we're all going to pass away, but you only have them for a temporary period of time. Go ahead to the next slide. Permanent life insurance. And sometimes you'll hear this called whole life or universal life. So the advantages are that this remains in force until the policy matures. And what that typically means is it remains in force until you pass away, until you die. At that point, there's a death benefit that goes on to beneficiaries. So the premiums are fixed forever, and it will never expire as long as I pay it. If I get sick, they cannot take this policy away from me. They cannot raise my premiums down the road in 20 or 30 years when I'm older and maybe not as healthy. These policies, they will accumulate cash value on a tax favorable basis. So if there's cash that grows inside of a life insurance policy, you can typically access it and pull the money out tax-free. So for a lot of people, if the question is, do I want to have life insurance when I die? Typically, permanent life insurance is the best kind of insurance to have because you're guaranteed to have it for your whole life. So term insurance is often used when people are younger and need more coverage. And quite a few people, a lot of people that I work with and have talked to will have both permanent and term insurance because both can serve different purposes. A question that I hear from a lot of people is like, how much insurance do I need? And this is a very personal question. It depends on, how long would you like your income to go on for if something were to happen to you? Do you own a home? What about college? Would you want there to be money for college? So all those things, are questions that need to be answered when you're looking at how much coverage you need. One, this is an old insurance kind of, saying here where, if you had a machine in your garage that was printing $100,000 a year, how much would you insure it for? Would you get as much insurance as you could for it? You knew it's going to print $100,000 forever. That is what we are. Whatever your income is, wherever you are in life, your greatest asset is your ability to get out of bed every day and go to work and produce a living, and that is your greatest asset for most people. So having enough insurance, disability insurance, life insurance, you want to make sure that you're insuring, your life, your human life value, not just what you think you're worth right now. So we can go ahead to the next slide. Here's a couple statistics that I found really interesting that I looked at recently about life insurance. 50 million people feel they need more life insurance coverage. That's a lot of people. And those are just the people that feel like they need it. There's a lot of people that probably don't even know they should have more life insurance coverage. 63% aren't buying life insurance because of the price, yet 80% of consumers think life insurance is more expensive than it actually is. So that runs a little counterintuitive, right? People don't buy it because they think it's expensive, but it's way cheaper than most people actually think. People are living longer, we're more healthy. Life insurance is one of those things where the rates have actually come down over time. Right now with COVID-19 going on, actually, I know some companies have actually priced their coverage a little lower right now. So if you haven't reviewed this in a while, If you have a policy sitting in a drawer, it's a good time to pick it up and make sure you review what you have. Go ahead to the next slide. I'm not going to spend a lot of time on long-term care insurance. I just want to touch on this real quick. And actually, you can move, there's a couple more things on this slide you can kind of fill in. There you go. That should be it. So, for those of you that are, 40, 50 and older, that's typically the time most people start thinking about this. There's a 50% chance you're going to need long-term care if you live to age 85. So what this means, some people think of it as nursing home insurance. I think of it almost as like stay out of nursing home insurance, because most of these policies have provisions to help keep people at home and receive care in their home. It's just something to think about if you have older parents who haven't talked about this or had a discussion with anyone. It's one of those things that I would recommend to at least make an informed decision about. Go ahead to the next slide. Okay, estate planning. So this is really fun stuff. Another thing I hear a lot from people. Do I need a will? Well, there's a couple of things to consider there, because not everyone necessarily needs a will, but if you have assets or own anything that you cannot write a beneficiary on, like a house or a boat or a kid. So if I have a child, I can't just write a beneficiary designation on there. So yeah, I probably need a will or guardianship directives if you answered yes to any of those questions. If you just have, some basic assets, a 401k, you rent, you might not need a will yet, but you do need to make sure those beneficiary designations are all up to date. So if we move ahead to the next slide here, this is just some definition. A will is something that will express where you'd like things to go. A trust is for holding ownership of assets and for distributing those assets beyond life. So they're different. You typically, if you ever get a trust done, you're going to already have the will component taken care of. Let's go ahead and move to the next slide. Directive. So this is a big thing though for pretty much anyone should talk to an attorney if it's important to you to be able to know who the person is that would make medical or financial decisions for you if something were to happen. When you get a will, you typically will get directive documents with that will. And the directive documents will tell you, who do I want making financial decisions for me? If something were to happen to me and I was in a coma, who's the person that the doctor is going to be talking to? So if that's important to you, you should look at, maybe I need to get like a will and those directive documents in place. Provisions for children. Obviously, if you have kids and you're sitting here and you're like, I don't have any of this stuff, then the court will make the decision for you. So if something were to happen to you and they need to decide where your children go, then a judge will decide, and typically it will go to a family member of their decision, whether it's a parent or a sibling. So if you want to control that, then you really need to have those provisions in place. So will is directive documents, guardianship, asset distribution. Trust actually owns the assets and helps to distribute them. If you have questions about this, again, this is something that we help a lot of people with. I'm not an attorney, but I can help point you in the right direction. One resource that I know a lot of people who have used is called LegalZoom.com. You can go on LegalZoom and for a few $100s, you can walk out of that. You can get all your directive documents, a will, the basic stuff in place. So there's a few different ways. If you are sitting there and thinking, maybe I need a trust, I don't know, I think my stuff's a little more complicated, then I would typically recommend that you have a consultation with an estate planning attorney. So go ahead to the next slide. So we just covered the foundation. Now we're going to talk about the more exciting stuff, and that is the ground floor, second floor, and the loft. So here you can see what we're really displaying here is as you go up a floor, you're getting more risky. So as I'm, the first floor, the ground floor there, that's where I have my cash, my savings, maybe cash equivalents, things that earn interest but don't lose money. Then I go up to the second floor where I have maybe some real estate, some of those balanced type of investments that aren't quite as risky. And then when I get up to the loft, that's where I want my big returns. I'm going to take more risk, either in the stock market, with speculative assets, precious metals, whatever it might be. That's where I'm going to go for my bigger returns. And it's not that any one of these floors is better or worse than the other. They're just different, and we need to have a little bit on all of them. So if we go ahead to the next slide here, when we talk about diversification, the first thing that we always tend to talk about is risk, right? Most people understand the concept of risk diversification. I'm going to make this really simple. You can advance one slide here and just draw a line down the middle of the house. Anything that you own above that line, I'm going to call those things paper assets. So you can advance actually 2 more clicks on the slide. So paper assets, these are investments that I own that go up and down in value. And most people here, if they have a job, with the bigger employer, you have a 401k, and that goes up and down in value. You don't know how much it's going to be on any given day. So that's a paper asset. If I owned a stock, the stock is going up and down all day. I don't know where it's going to finish today. So that is a paper asset. Fixed assets are investments that are not going to lose any value. They'll only gain interest or dividends. So there's a rule of thumb that I want to point out here. There's a big question that I get from people is, well, how much should I have where? And the rule of thumb is that you want to have a percentage of your money equal to your age in fixed assets. So if I was a 30-year-old, I might want to have 30% down in that fixed asset area and 70% up in the paper asset area, and the more risky stuff. And then when I'm 70, I'd want to flip those. So I have 70% in the safer stuff and 30% in the more aggressive investments. Does that make sense? So the idea is, as we get older, we're moving some of our money down below the line to get safer. That concept has existed forever in finance. But more recently, we've been talking to people about a different type of diversification. You can go ahead to the next slide. And here we're going to talk about tax diversification. You can advance a couple here. One more. Yeah, there you go. So what are we talking about here? We're going to draw another line down this house. And here we have pre-tax and after-tax investments. Pre-tax investments are like a 401k or a pension. These are investments where we have not paid any tax yet. So when we save up our money, we get to take a deduction. If I put $1,000 into this account this year, it means I don't get taxed on that in 2020. But when I retire and go to pull money out, I'll pay taxes at whatever the rate is then. After-tax investments are investments where we pay our income tax now and we put our money over onto that after-tax side. And there's a few of them that the money can grow and grow and grow and grow, and we can pull all our dollars out without paying any more tax on it. So a lot of people on this call, probably have a Roth IRA or a Roth 401k. Those are after-tax investments. And you can make one more click here on the slide, I think. So these are some examples of after-tax investments. Stock purchase plans or stock, mutual funds, personal assets like business assets. So if I own a business, that's an after-tax asset. The three on the bottom, those three are the tax-free investments. And what that means is that if you ever see the word Roth, it means that any money you invest in that account, you'll have zero income tax to pay at the end when you pull your money out. So what we really, really want to advocate for people is that we think about tax diversification as much as we think about risk diversification. We want to have balance on both sides of this line. And, 20, 30, 40 years ago, the pre-tax side was way more popular. In 1980, the highest federal income tax rate when Ronald Reagan got elected in 1980 was 70%. So taxes were really, really high back then. And now they're actually at historic lows kind of compared to where they've been historically. So we want to make sure that we have some money that's not going to be taxed when we retire. This is probably the biggest takeaway on the investment piece here is you don't want to have all your money in one bucket when it comes to taxation. If all my money is pre-tax or all my money is after tax, then I don't really have any diversification in case tax rates go up or down in the future. So this piece, just, if you have questions about this, if you have a Roth 401k at work and you're not sure how it works, wait a minute, how much should I be putting into which one? That is a big question that we get from people. That's something that you could, if you wanted to have the one-on-one, also I'd be happy to talk to and kind of map out where your money falls on this diagram in which quadrant. We can go ahead to the next slide. The last piece that I wanted to talk about today is, actually, can you go back to, is a concept, one more forward, thank you. So a concept that a lot of people see called reallocation or sometimes like rebalancing. And this is a concept I want to just talk about really simple for a couple minutes is if I had 3 different investments, right? And I started the beginning of the year with them all at the same level. What happens through the year, and you can click to the next slide. So let's just say at the end of the year, go ahead, one more. And one more. Let's just say at the end of the year, they look like this. And I have, investment A has done really good. Investment B has done okay. Investment C, just had a bad year. Most people in this situation, what they do is they sell C and they move that into A. And what I want to just talk to you guys about a little bit is emotion and how that drives that movement or impulse of people to do that. So what should we do in this situation? And go ahead to advance. So that's what most people do, right? And in that case, we just bought some stuff high and sold some stuff low. What I really, we really want people to think about more is instead of doing that, and you can go ahead. You could go ahead, couple more. Find a new kind of watermark there and sell some of A and move it back into C. So you make sure that you're rebalancing and selling stuff when the prices are actually higher. The biggest place that I see this is inside a 401k. If you have a 401k at work or an IRA and own more than one investment inside there, there are rebalancing options that you can usually click on that account to make sure that it's doing this automatically. So I just wanted to point that out. And this is the idea is basically these investments are going to move value throughout the course of the year. So we need to kind of be constantly adjusting them. And some accounts offer us the ability to do that automatically. Go ahead to the next slide. Student loans, I just wanted to touch on this real quick before we wrap up. Student loans are tricky because they have to be paid. The biggest thing that I will say is if you are struggling with your student loans, have you called the company directly? Have you tried to renegotiate? Have you looked at switching to an income-based payment plan? These are all options. Are you making sure that you're getting your deduction for the student loan interest you paid this year? Those are all things you can do to help the problem. A lot of times I hear from like younger people, like, what should I be doing? You know, I have these student loans. Should I pay them off and not put any money into my 401k? Well, you don't necessarily want to sacrifice savings to pay down, your student loans. So if your company is giving you a match on your 401k, you have to get the minimum. You don't have to, but you really should get the minimum. So if my company will match 3% of what I put in there, I need to be putting 3% in because I'm earning 100% return on that money if that's what my match is. So get your match. Don't sacrifice putting money in just saving, even $100 a month into a cash savings account that you don't touch. That is very important. If you can start doing that young. If it's $50 a month or $25, it doesn't even matter. Just start putting some money into cash, and then make sure you're paying down, but go through all the different options to find out what payment plan is best for you. And if you go ahead and advance the slide, we'll take a look at a couple things from the CARE Act, the Federal Loan Relief Program. So make sure it runs through September 30th that, if you have a federal student loan, you should be paying nothing right now. There are people that I've heard are like, well, I feel like I should be paying, so they're sending in money. Don't. The interest is not accruing. If your payments have been suspended, just do not go. You don't have to pay right now. Public service loan forgiveness, those should be suspended as well right now. So if you did have any loans that you were paying there, or even the loans that you have should not be accruing interest right now. And then, like I said, contact your lender. So it's private loans, it's all lender to lender. So if right now you're having problems and you don't have a federal student loan, you really just have to call the lender, find out if there's anything they can do for you to help. And then, try to really sit down and make sure you're budgeting for it. So there's not, as far as student loans, there's not a lot of there's no silver bullet that's just gonna, take care of the debt that you owe. So right now, what we have to do is just look for the best ways to pay it back and the most efficient ways to pay it back. You can go ahead to the next page here. So if you look in the workbook, one of the pages has this. This is a really nice way to think about kind of checking those boxes on the foundation. All of these things here are things that everyone could kind of think about, you know, how does this apply to me? Do I need a line of credit? Maybe not, but I need to have cash savings. Everyone should have that. You know, everyone should have health insurance and those types of coverage. If you're like, well, what's umbrella liability? That's something you can talk to your whoever you get your homeowners or car insurance from, and they can help you out with. So different types of insurance here. This is a nice little list to be able to reference. And if there's anything here that you're like, oh, I really need to talk to somebody about that, that would be something that I'd be happy to help out with. If we just advance on. So what to do now, before we get to the question and answer, I'm just gonna go through this. Understand your cash flow and your debt. You know, budgeting is not a very exciting word. I tell you, just try to think of it as like your cash flow. Like, what do you have coming in? What do you have going out? Do you know how much it costs to run your house? Like, how much would I need to get by every month? The mandatory stuff. If you don't know that number, that's a really good place to start. AskMME.org. We have a whole bunch of calculators and videos and how-to things on there that you can go check out. So that's a nice resource if you're just looking for more resources. Go ahead to the next slide. Oh, you can go. The personal education session. I'm just going to spend a second here. This is if you're like this, any of this stuff you've been sitting and going, I don't know, or yes, I need to review that. We do them on Zoom. It's all confidential, an extension of the workshop. And what that means is it is education only. If you're looking for someone to come and say, hey, you should do A, B, C, and make recommendations for you, that's not necessarily what this is about. This is about helping to provide you with resources and information to better understand where you are and answer any of the questions that might have come up today. Spouses and partners are welcome if you want to have anyone else on the call. Go ahead to the next slide. You can go to the next, yeah. So this is what's in the workbook if you want to do that, and not only for a perspective of one-on-one, but we also want to hear, you know, the library would love to know what else do you want to know about, if there's any other topics people are really concerned about. Then there is also just a one box on there, a little legal print down at the bottom is just a little statement saying that we provided the content today, not the library. And there also is where you can request the one-on-one. Also, if you work for a company that you're like, oh, I wish we had a workshop like this, or we had a series of workshops for us to help us out with this, we would be happy to get in touch with someone about that as well. So from there, I guess we can kind of look and see if there's any questions. Am I not seeing any, or do I just not see what's up?
So I see some hands are raised. If the people with their hands raised could type in their questions, then we will read your questions without disclosing your name. Just gonna wait a second and see. I don't see any questions for you, Tim. I'm gonna wait just to make sure.
Yeah, and if any come up or anyone reaches out to you guys, I'm happy to obviously have them forwarded to my email or whatnot.
Okay, so I do see a question here. How do we schedule the one-on-one? So
if you go to the workbook, it's in the handout. There's a handout. It's the MPL Financial Foundation. And the last page of that, there's this response card that we're looking at right now on the screen. So that's where you can request the one-on-one. Once you submit the form, make sure you enter your email, then we'll reach out to you to schedule that. And just to let you guys know, that is all you're going to get in your email. We don't share emails, give them out to anyone. The only thing you're going to get from us is an email to set up the time for the one-on-one.
And I can personally recommend that because that is actually how I found him as our presenter. Is I attended a different workshop where he offered a similar consultation, and I definitely recommend taking advantage of this free resource.
Thank you. So, and yeah, and also, I mean, I could give my email too if anyone wanted that. You know, if they're having trouble as well, I could just type it in, I think, right?
I think if you want to type it into the chat, then we can use it that way. I believe it should be, or is everyone able to find the handouts? Because what I would recommend is if you can open it and download a copy so that you have access. That I believe that has Tim's contact information included. Okay, so it looks like someone needs the handouts. I'm gonna wait and see if I can find that here. I am struggling to find the handouts here. I know we uploaded those though.
I see them here, but so yeah, I see the handouts on my end, but I'm on a different device.
Okay, and I do see one person asking, okay, someone does say they see the PDF handouts. So the tab is actually called handouts. So if you can look for that, we'll stay on the line. Another the attendee is saying double click on it. There's a little arrow next to where it says handouts. You want to click on that arrow and it expands it. And then you want to double click on the handouts. So, and I do see another attendee asking if we're going to do another class. Well, the nice thing is that we've actually recorded this session and we will be posting it on Milwaukee Public Library's Facebook page. So if you want to revisit any of this, that's going to be available to you after we upload that. So I want to wait just a little bit longer. Does anyone else have any questions? Okay, I'm seeing some people saying they were able to download the handout.
Great. And yeah, and also you guys, with these programs, if you work in an organization that, you know, just most of these lessons should be taught to us in high school. You know, most people are going to have some type of retirement account, are going to have questions about this stuff. The workshops, we have series of workshops that we can do. Being a not-for-profit, we can also do it. We don't really charge a fee. So if you just wanted to have a talk about kind of what those programs look like for your company, that's also something I'd be happy to share some information about. And that tab is on there too. So you can request info for you. You can request for a one-on-one personally, or you can request to get information for your company, or both, if that's what you want to do.
Okay, it looks like we don't have any new questions. So, yeah, I think we can wrap up now. Thank you so much, Tim. This was really great.
No problem. And yeah, and if any other people email you with any follow-up stuff, just feel free to pass it along.
All right. Well, thank you everyone for attending. I really appreciate that you took your time to learn with us today, and keep looking. We'll have more workshops similar, and just keep checking back on Milwaukee Public Library's webpage, because we'll continue to offer workshops throughout the year on various topics. So thank you so much, everyone.
Take care.
All right. Bye-bye.
Bye.